Welcome back. You're tuned in to Bazaar Morning Call. Well, let's get a couple of earnings then reactions on the show. We have J&K Bank. That's the first management on the show. The bank reported a strong set of numbers in the second quarter. The profit after tax, the deposits as well came in healthy, although the NIMs saw a slight dip. We're now joined by Mr. Amitava Chatterjee, the MD and CEO at J&K Bank. Well, we're going to be focusing on three focal points. Quarter four credit cost to be negative, the ROE expansion levers for FY27, and what's the possibility of the QIP in FY26? Well, Mr. Chatterjee, good morning. Welcome to the show. Let's start with the third point. Are you going ahead with the QIP? Do you think you should be doing it at this stage? And if you could tell us, why do you want to do it?
Very, very good morning, and thank you for having me here. You have a point there. The numbers are good, profit picking up and likely to pick up further in the coming years, coming quarters. So, yes, we have a approval from our board. We are prepared for it, but maybe not this quarter, maybe next quarter or the quarter after that. But we are looking at our steady credit growth. And based on that, we will be taking a call as to when to go for the QIP. Otherwise, we are ready for it.
So QIP most likely in H1 of FY27, not in Q4 of FY26?
Yes.
Okay. You know, the reason why we're persisting on asking this is because your valuations are less than, many of your peers. There is no immediate need for capital infusion. Your CRAR is about 15%. Your market price today is still lower than the QIP price of 2 years ago, which was about 107.6. So why push right now and dilute?
Very true, very true. You are right. And we will take a call based on going forward what we see. Since we have had a pretty good year this year, we had taken a call based on our numbers, probably third quarter or fourth quarter of last year, where we felt that we needed. But now at the moment, since the bank has been doing so well, we will take a call maybe sometime later, H1 of next financial year.
You know, Mr. Chatterjee, you mentioned that the Rural Infra Development Fund deposits will be maturing worth around 3,000 crores next year. And your PSL profile suggests no further need for fresh RIDF deposits. So over the course of the time, do you still think this QIP is required for the bank?
You have a point there. See, we were not in such a position earlier. We had introduced one product this year which gave us this position. If all the previous years we were required to invest in RIDF. So in spite of the RIDFs maturing, but we still had to invest more on that. So now we are in a position, as per the PSL positions now, we have become comfortable. So the decision to go for a QIP was based on the past history, what we had. But since we have done so well during this year, we still hold on to the decision, but maybe we will take a call sometime later.
That's right. You know, to be fair, you did take the board approval for QIP in November of last year. And as you say, things changed after that. What about loan growth? Very strong, 18%, but your guidance is only 12 to 15%. Why not up the guidance? And for FY27, how would loan growth look like?
In fact, if you remember in the last call itself, I had mentioned that the credit growth is likely to be 12 to 15%. The offtake was good, and we had made certain changes in our processing. So the bank really did well in credit growth. And the best part is the combination of retail and corporate has been equal. And the contribution from both our home territory as well as the rest of India has also been equal. So since we could achieve what we strategized in the beginning of the year, so at the moment, I think I'll still say that the guidance for credit growth will be somewhere between 12 to 15%. Maybe there can be an upside. That also depends on how well we can improve our deposit position and CASA, of course.
with more questions, but we'll leave it there for now. It's a pleasure having you with us here bright and early this morning on CNBC TV 18, sir. Thank you and good luck.